We're here in midday and midweek trade, and the U.S. stock futures are mostly flat on the session. We're awaiting the Fed minutes, which will be released ahead of the close. Joining me now is Peter Costa of Empire Executions. Peter, glad to have you on today.
I'm glad to be here.
Well, it's been a fairly interesting week. We've seen oil seesaw on both sides of the flat line, and we've seen the dollar higher. But of course, it's all about the upcoming elections as well as the Fed. So are you pricing in a Fed hike at the end of this year?
You know what? They shouldn't, but because I think that they shouldn't doesn't mean that they won't. I'm pretty sure that there will be a rate hike in December. I don't think it's called for, but you know what? They look at a lot of different metrics, and they're a lot smarter than I am. So we'll go with that. I mean, I think pretty much everyone feels that that's going to happen.
And Peter, we'll be keeping an eye on those Fed futures, but we still have the elections to go through. And I'm sure we'll be getting better clues in terms of what Janet Yellen has had to listen to from other Fed members. But it is also earnings season. We got Alcoa's results, and we have banks reporting at the end of this week. So given what we're seeing in commodities, the U.S. currency, what should investors watch out for?
Well, they got to be very careful. This is going to be a tough earnings season. At the beginning of the year, I felt that the third quarter would have been a little bit stronger. I don't see that happening now. I think this is going to be a continuation of this earning recession we've been in for the last 6 quarters. That's going to turn around eventually. I don't think it's going to turn around in gangbusters, but we're not looking for anything great. And I think the financials might come in a little bit better because they've had some good, there's been some good calls there. But overall, I don't think you're going to see anything that's going to be a major surprise.
And I do have to ask you about oil prices. We are seeing the front-month contract around $50 a barrel right now. But whether or not we get an OPEC agreement out or not, what do you think about the overall energy sector, and where will it go heading into next year?
Well, I think there's some room on the upside. I think that, Russia was supposed to, announce some sort of cutback, but the Russians are very hard to predict. The Saudis were, cutting back, but the Iranians won't. I mean, it's a grab bag what's going to happen there. But if you just look at it on a technical level, I think you look at about $47 or $46 as a baseline, and maybe we'll touch 60. But I think once you get past the point of being $60 a barrel, what that does is that brings a lot more production online. So even if demand starts picking up and oil goes up to that level, there's also going to be a production situation where we'll have more production. So, we have a nice trading range, which is not a bad thing. And I think that the U.S. economy and I think the world economy can really absorb and sustain a $55 or $60 a barrel oil. I think that once you start getting into the speculative phase of it going up to $70 or $80 a barrel, that's where there's a problem. But I don't see that happening. I think that we'll probably, going into the end of the year, we'll probably see a rise in oil, maybe to $55, maybe $60 a barrel. But I don't see it going any further than that.
And Peter, before I let you go, I do have to ask you about the elections. Now, we have less than a month to go until that key date, but what do you think will happen in terms of the results and what that will do for the stock market?
Well, I think if you look at the polls, and you got to be very careful about believing polls. We've seen that happen before with Brexit. They were so wrong. But the polls are in the U.S. I think are a little bit more accurate, especially when it comes to elections. So, that being said, if you think Hillary Clinton wins, the market should react okay. I mean, it'd be more of the same that we've had from Obama for the last 8 years. So I don't think the market will do that bad. I think with a Trump presidency, that might be a totally different story. And I think that if there is a Trump, surprising victory, the market's going to take it on the chin. Short term, not long term, but short term, it would be a net negative for the market short term.
Okay, Peter, well, as always, thank you so much for your insight and thanks for your time.
Thank you.